Let's have a quick conversation about Balboa Capital. And the big question is this business lender really right for you this year? Let's have a conversation about that. First thing first, if you think of, let me give you a presentation. If you think about Balboa Capital, I want you to think about a subsidiary of Ameris Bank. So this is a lender that's actually affiliated with a traditional bank, FDIC insured. Okay, so that's kind of cool because it gives you some kind of assurance, if you will. Okay, and so what is Balboa Capital? Well, Balboa Capital actually is a direct lender that caters to small business owners through its three main loan types. You have short-term loans, business lines of credit, and you also have equipment financing. So that's that. Those are the three types of funding you can actually receive through Balboa Capital. And so the company has been around for nearly 20 years now. Okay, and over the years, Balboa Capital received several accolades for its operation as one of the leading alternative lenders. But again, I want you to really understand that they are an alternative lender, but basically they are now part of Ameris Bank. By the way, Ameris Bank actually acquired them in 2021, like during COVID. Okay, that's really that's why they were sold to a traditional bank anyway. And one thing I want you to really also understand here is that basically with Balboa Capital, you have the possibility to actually have multiple loans at the same time, as long as you have the proper, let's say, revenue based or the proper business model. So, not a lot of direct lenders will give you multiple loans at once, but Balboa Capital does, as long as you have a great relationship with them. One thing I also want to say here is that you have to understand that with Balboa Capital, you are also able to get vendor financing, franchise financing, and commercial financing. So that's kind of cool. And they don't have restrictions in terms of the niche you have to be in. They don't have restrictions in terms of the economic sector. So they actually approve all economic sectors that are actually legal. I mean, it has to be legal. So let me talk to you about the loan products that Balboa Capital offers this year. So basically, you have a short-term loan, equipment financing, business line of credit, and you have the general umbrella of business financing. Okay, let me explain a little further. So the company's loan products have amounts ranging from 5,000 all the way to a quarter of a million, and there is no specified minimum required personal credit score. So this is good because it gives you it opens up a lot of possibilities. So even if you have bad credit, you can still qualify for a loan through Balboa Capital. So first of all, let me talk to you about the short-term loan. So short-term loans from Balboa Capital are really ideal for you if you need funds for certain purchases, but you cannot pay immediately. You can qualify if your business is at least 1 year old and has a yearly revenue of $300,000, and the repayment term is 3 to 18 months with factor rates of 1.1 to 1.2. So that's 10% all the way to 20%. So you also have equipment financing. So Balboa Capital will give you equipment financing loans up to $250,000. And so that's kind of cool. You can use the cash for anything you want. Okay. Now, your business will guarantee the loan, so you will not be personally liable. Okay. Your business should make at least $100,000 annual revenue and be established for at least 12 months to actually qualify for Balboa Capital's equipment financing arrangement. You also have the business line of credit. So that's actually the third product category to really think about. So here you have you're able to get like $250,000, and you have a factor rate of 1.1 to 1.2. Same thing as the short-term loan. Now the repayment term is from 6 to 18 months. So among the three financial products, the business line of credit requires the highest minimum annual revenue of 300 to half a million, $300,000 to half a million. There's also no required personal credit score identified on the company's website, but your business must be established for a minimum of 1 year. So let's just say, in general, your business has to be in existence for at least a year before you can qualify for a Balboa Capital product. You also have business financing. So in addition to its small business finance, basically Balboa Capital offers commercial financing, franchise financing, but also oh, you have vendor financing too. So that's kind of cool. Let me talk to you about the requirements here. If you think about Balboa Capital, what kind of requirements should you have in the first place? So basically, I think I've said this to you before, that your business must be operating for at least 12 months before you can qualify for Balboa Capital sort of product, right? Or whether you want to have the business term loan or business line of credit or equipment financing. So 1 year, okay? And the revenue, in terms of revenue, the revenue fluctuates from $100,000 to $300,000, and sometimes half a million. So that's the minimum, okay? And you need to provide some kind of a documentation of your banking history. So the thing is that Balboa Capital just wants to make sure that you are a bank, like your business has a proper banking process attached to it. So they might ask you for 3 months of business bank statements. I remember, I want to insist that they're not asking you personal bank statements. It has to be business bank statements. You got to have a copy of your driver's license. You need to have a certificate of good standing. So they just want to make sure at the state level, if you're an LLC or LP or C corporation or S corporation, you are able to receive a certificate of good standing from state authorities. Okay, that really is important for Balboa Capital. And also, you got to have a voided business check, a 2 year balance sheet. So if you're not in existence for 2 years, you need to have whatever balance sheet you have, maybe 1 year, and the second year projected. Same thing for profit and loss statements, and also business tax returns. So this can be your 1065 or your 1120S or your 1120. Okay, and Balboa Capital doesn't accept loan applications from applicants with unpaid tax liens over $75,000. So this is important to think about. And so, although the fintech has broad leeway in terms of considering businesses, the following industries are ones that it really avoids working with. So you have gambling, adult entertainment, oil and gas extraction, durable medical businesses, boats, and aviation. So something to really think about. So for Balboa Capital, you also need to know that what happens here is that they have a certain differentiation to really think about. So short-term loans and lines of credits have daily or weekly repayments. Okay, so this makes it challenging. This can make it challenging for your small business if you are trying to really keep your cash flow healthy. This could be disruptive to your cash flow. So be very careful before you apply. Okay, in terms of repayment intervals, it could really depend on your loan products. Monthly payments are the standard for the equipment financing industry. Okay, and Balboa often requires a personal guarantee from any business owner if they have at least a 20% stake or greater in the company. So that's kind of something to think about. And defaulting on a loan could lead to Balboa Capital filing a UCC lien against the business assets. And so this is something to really think about. So one thing I want to say is that Balboa Capital is kind of interesting in the sense that here you have a direct lender, you don't have a brokerage, or you don't have a loan marketplace. Because when it comes to business loans, you have a lot of players in the industry. There are neither direct lenders nor, let's say, loan brokers. Okay, they are basically your average loan marketplace. I'm speaking about Clarify Capital, for instance. I'm speaking about National Business Capital. I'm speaking about Lendio. among others. But Balboa is a direct lender. So although applying to Balboa may actually impact your credit score, they also have a soft pull process. Okay, so this is kind of cool because you are able to see how much you can qualify for before applying for real at Balboa Capital. And Balboa actually will report your credit score to the credit bureaus. There are some cases where they will report actually your your transactional history to business credit bureaus. So that's Dun and Bradstreet, Equifax Business, but also Experian Business. So if you want to apply for a Balboa Capital loan, you want to go to the website first, okay? So you want to visit the Balboa Capital website and you want to fill out the loan application there. Basically, this will take you about 2 to 3 minutes. Nothing very complicated. They don't ask you a gazillion questions, okay? They'll ask you some pointed questions, that's for sure. But the process is very streamlined. You are able to just answer the questions about your personal background and business performance as accurately as possible. So basically, like I said, Balboa Capital just wants you to be in existence for at least 1 year before you apply for a loan, and they will approve you. And so one thing I want to say also is that Balboa Capital will ask for additional financial statements for business loans over $250,000. So if you're asking for more than $250,000, they will ask you for additional paperwork. Just be aware of that. So you need to submit actually the required documentation as soon as possible. And as soon as you finish the application process and have satisfied the requirements, Balboa Capital will decide whether to approve or decline your business loan. So this is something to really think about. And you can expect actually a response within a business day in some cases. And so that's kind of cool. And you can be funded within 24 to 48 hours. Okay. And so once your financing has been approved and the loan agreement signed, you will receive actually the funds in your bank account. So just check your bank account, and this is and by the way, you are able to receive even quicker approval, quicker funding if you explain to your rep, the loan rep, what you're going to use the loan for. Okay, so just have a conversation with the rep beforehand and explain why you need the loan, and maybe they might be able to accelerate the whole process for you, the process from approval to funding. So that's really important. So let me give you a few extras here. If you think about Balboa Capital, what happened post funding? Well, once your loan gets funded, basically the repayment schedule depends on the loan type. So every loan type is different. Remember that Balboa Capital has 4 types of financing: short-term loan, equipment financing, line of credit, and also business financing. So basically, you might have to pay daily or weekly or monthly. Equipment loan borrowers make repayments on a monthly or quarterly basis. Okay, so the short-term loan and business line of credit requires daily or weekly payment. You will need to start making payments immediately if you have a daily payment schedule. Okay, so as a borrower, you can check your loan status through your online dashboard or by calling customer service. You can check your payment history or how much is left on the loan. So that's kind of important. It is actually possible to get additional funding before paying off your loan. Okay, this is kind of cool. So basically, Balboa Capital's concurrent funding policy rather, allows you to take out another loan after 90 days from your original loan. And you can also renew your Balboa Capital loan after paying down 50% of the loan. So that's really good from a flexibility point of view. That's really fantastic. So what are the advantages and disadvantages of Balboa Capital? The advantages first. Well, Balboa Capital is not really a strict lender. It is actually a lenient lender relative to traditional business lenders regarding the list of loan application requirements. You don't need to meet a minimum personal credit score. Okay, but they do require a score reflecting that your business can handle the, the repayment. And the equipment financing arrangement has a long repayment term of up to 5 years. Okay, equipment loans provide funding for construction, restaurant, manufacturing, tech hardware, and office necessities. So it's something to really think about. And by the way, just be sure that you have thought about the repayment window. What are the disadvantages here? So if you think about Balboa Capital this year, basically there is an origination fee for every loan. You have to pay an origination fee, and you also need to think about Balboa will file a UCC lien, so you can't really get away. This is just the way they operate. Okay, and so a UCC lien, Balboa Capital files gives them the right to stake a claim to your business assets. Okay, so Balboa Capital has also a priority claim to the assets that can be up for sale as compensation if you fail to pay your loan payments. So something to really think about if you are thinking about doing business with them. Okay, and something else I want to say here is that basically with Balboa Capital you have the possibility to get paid fast, but there is a but here. Like just make sure that you speak to your customer service rep before you actually sign up the the loan agreements, especially when it comes to larger loan amounts. So let me close the conversation by talking to you about the pros and cons of Balboa Capital. So the pros, you have a simple and streamlined application process. You have fast funding on loans. That's kind of cool. You have reasonable rates compared to other alternative online alternative lenders, and you have multiple loan products. That's really good from a flexibility point of view. Okay, and so that's really for the positive aspect of positive side of Balboa Capital. On the flip side, the factor rate can really increase the cost really, and the I mean you're looking at rates that go all the way to 50%, depending on how risky they think your business proposal is. And also, the website doesn't publish pricing transparency, so this is something to really think about. And but overall, Balboa Capital is safe. Like I said, here is a lender that is associated with Ameris Bank. It has a solid track record of financing small businesses across diverse industries. Okay, that's kind of cool. And what I want to say also is that you are able to get things done fast. Okay, and basically they report to credit bureaus, so you are able to grow your credit score from there. And by the way, if Balboa Capital declines you, you have the possibility to reapply after 30 days. You can improve any deficiencies that might have caused you to be rejected during the period. Okay, so this is really good. So overall, if you are able to, let's say, if you want a loan of less than a quarter of a million, and you're willing to really show at least revenue of $100,000 to $300,000, this is really good. This is really good. You can get a loan through Balboa Capital, not a problem. In conclusion to this conversation, I spoke to you about Balboa Capital. I gave you the presentation, the requirements, the extras, the decisions, and now the conclusion. Thank you so much. I'll see you next time. Until then, remember, stay marvelous.